The IPO of HDFC AMC hit the streets in July 2018. The company was listed in August 2018 at a hefty premium of 58% over the issue price. Now, since its listing, the stock has gained another 183% as of June 19, 2025. Contrast that with the Nifty 50's rise of 117% during this period. Now, consider HDFC Life Insurance Company. Its IPO was launched in November 2017. The company was listed on November 17, 2017 at a premium of 7% against the issue price. Now, since its listing, the stock has increased by another 146% compared to Nifty 50's 140%. Not a big difference, but still a market-beating performance. Now, HDB Financial Services, the NBFC arm of HDFC Bank, has come up with an IPO through which it's raising around 12,500 crores. This makes it the biggest IPO of 2025 so far. Now, the IPO opens on Wednesday 25th June and closes on Friday 27 June. Now, how might this new HDFC Group company perform on listing and after that? Will it follow in the footsteps of its cousin HDFC AMC and HDFC Life and create wealth for its investors? Should you invest in this IPO? The analysis in this video will help you answer these questions. Hello and welcome to ET Money's YouTube channel. In this video, we'll analyze HDB Financial Services IPO in 360 degrees so that you can decide if it's worth investing in it. This video belongs to our IPO playlist. To watch our previous IPO analysis, you can explore it. The link is in the description. Okay, let's start with checking the key IPO details. The key IPO details are on your screen. The total issue size is 12,500 crore. Of this, 2,500 crore is the fresh issue and 10,000 crore is the offer for sale. In a fresh issue, the money raised goes to the company, which is HDB Financial here. In an offer for sale or OFS, the money raised goes to the selling shareholders. HDFC Bank is the selling shareholder here. Now, as we saw, the IPO opens on Wednesday, June 25th and closes on Friday, June 27th. The lot size is 20 shares and the IPO price band is 700 to 740. So at the upper price band, a retail investor will have to spend 14,800 for one lot of shares. The company's pre-IPO shareholding is about 79.6 crore shares, which will increase to about 83 crore shares post-IPO. Now, HDFC Bank's stake in HDB will consequently fall from the current 94.3% to 74.2%. The IPO also has a quota for HDFC Bank shareholders, aggregating to 10% of the issue size or 1,250 crores. Now, this means that if you have HDFC Bank shares in your Demat account, you can apply for the HDB Financial IPO under the shareholder quota and the retail quota, which can increase your chances of IPO allotment. Now, another 20 crore worth of shares are also reserved for employees. So, these were the key IPO details. Let's now take a look at the company's business. A subsidiary of HDFC Bank, HDB Financial is a non-banking finance company or an NBFC. Its lending products are offered through three business verticals: enterprise lending, asset finance, and consumer finance. Now, these three verticals comprise multiple lending products, including business loans, gold loans, commercial vehicle loans, personal loans, auto loans, etc. Now, apart from its lending business, the company also provides fee-based products such as insurance product distribution, primarily to its lending customers. It also offers HDFC Bank business process outsourcing services such as back office support, collection, and sales support services. Now, as of March 2025, its loan book stood at about 1.07 lakh crore. Of this, enterprise lending constituted the largest share of 39%, followed by asset finance at 38% and consumer finance at 23%. Now, the company's loan book is highly granular. HDB's top 20 customers constitute just 0.34% of its total gross loans, and the average loan ticket size stands at just 1.65 lakh. About 73% of its total gross loans are secured and 27% are unsecured. As of FY25, 85% of the company's revenue came from its lending activities. HDB's customer base stands at 1.92 crore and has risen by 1.6 times in 2 years. HDB primarily caters to underserved and underbanked customers in low and middle income households with minimal or no credit history. This tilt is reflected in the company's branch concentration too. 70% of HDB branches are located in Tier 4 plus cities. As of March 31st, 2025, the company had pan-India network of about 1700 branches in about 1100 towns and cities across 31 states and union territories. The company enjoys the highest credit rating of AAA stable by CRISIL and CARE. So, this was about the business of HDB Financial. Now, as far as industry's outlook is concerned, NBFC credit growth is expected to be 15 to 17% per annum between FY25 and FY28. That's higher than the growth of 13.2% per annum between FY19 and FY25. Not only this, but this growth is also higher than the systemic credit growth of 13 to 15%. Now, this suggests that within finance companies, NBFCs are expected to grow faster. This is a plus for HDB. This brings us to the next section, financials and valuations. But before we start with that, do subscribe to the channel if you aren't already a subscriber. And don't forget to press the bell icon so you never miss a video from us. Let's start with some key financials of HDB over the last 3 years. Over the last 2 years, the company's revenue has risen from about 12,400 crore to 16,300 crore or 14.6% annually. However, profit growth is sluggish at just 5.4% per annum. Profit has also fallen year on year from 2,461 crore to 2,176 crore. The ROE or return on equity has fallen from 18.7% to 14.7%. The average stands at 17.7%. Ditto with ROA. For that, the average stands at 2.72%. Now, the company's gross bad loans or non-performing assets have fallen from 2.73% to about 2.26%, but they have increased year on year. Now, the net interest margin, which is a profitability indicator for finance companies, has been falling too. Overall, HDB's financials don't impress much. But that's only half the picture. To get the full perspective, we must also compare HDB with other listed NBFCs. So, let's do that next. Take a look at the table on your screen. It lists some key financial and industry metrics for 6 of HDB's peers as stated in its RHP. In terms of market cap, HDB is 4th after Bajaj Finance, Cholamandalam and Shriram Finance. As far as size in terms of the loan book is concerned, HDB is at the 5th position. At 23.5% per annum, HDB's rate of loan growth is at the 4th position. Its revenue growth of 14.6% is ahead of only L&T Finance and its profit growth is ahead of only M&M Finance. HDB's average ROI is at a respectable 3rd position and its average ROA is at the 4th position. At 2.26%, its NPA is in the 3rd position and that's good. Finally, as far as average net interest margin is concerned, that's perched at the 4th place. Overall, HDB's financial and key industry metrics are neither too bad nor too good as compared to its peers. Finally, let's compare HDB's valuations with its peers to see if the company's middling performance is compensated by its valuations. Now, for finance companies, the price to book ratio is the go-to measure, so we will use that. In terms of attractiveness of valuations also, HDB is at the 4th position. It's cheaper than Bajaj Finance, Cholamandalam and Sundaram Finance, but more expensive than M&M Finance, L&T Finance and Shriram Finance. So, like financials and industry metrics, in terms of valuations too, HDB lies in middle. Now, one thing to note here is that HDB has significantly reduced its valuations compared to the valuations of its unlisted shares. Now, this may indicate that the company was wary of launching its IPO at prevailing valuations, perhaps because there are already better options available in the market today. Okay, now let's take a look at some important red flags of HDB Financial. In IPO investing, it isn't sufficient to evaluate the business and financials. One must also pay attention to certain IPO-related metrics. We discussed them in our video on analyzing IPOs, so you can watch that video to learn more. In that video, you will also find 5 IPO hacks to increase your odds of success in IPO investing. So do watch it. As always, the link is in the description. Alright, so here we will discuss the red flags in HDFC's IPO based on those metrics. First, much of the IPO proceeds will not go to the company but to the promoter. As we discussed towards the beginning of this video, of the total issue size of 12,500 crore, 10,000 crore is an offer for sale. This means the promoter, HDFC Bank, is selling its own stake in the company, so 10,000 crores won't go to HDB Financial. Second, if a draft circular issued by RBI is implemented, the promoter, HDFC Bank, may be required to reduce its ownership in the company to less than 20% on account of overlapping business with HDFC Bank and a group company. Now, if this happens, it could mean a significant overhang for the stock. Third, over a fourth of the company's loans are unsecured and hence are not backed by collateral. Such loans can prove to be a major pain point during challenging economic times. Fourth, the company confesses that it operates in a hyper-competitive space. As of March 2025, its market share is just 2.22% in terms of AUM. That places it at a distant 6th position as compared to its peers mentioned in the RHP. Alright, let's now summarize the findings of this video in the concluding section so that you can decide whether or not you should invest in HDB Financial's IPO. HDB's IPO has come against the backdrop of the RBI's recent rate cut of 50 basis points, CRR cut of 100 basis points, and relaxation for gold loans. So, the market sentiment for financial companies seems to be good. This should benefit HDB. Even in the medium term, the outlook for NBFCs is positive, as we discussed earlier. The parentage of HDFC Bank is a big plus. HDFC Bank has carved out an image of reliability, efficiency, and sustainable growth for itself, and its subsidiary is expected to exhibit the similar virtues. The negative include a middling performance. If HDB's performance and numbers don't disappoint, they don't stand out either. The valuation cut of about 40 to 45% before the IPO has made the issue competitive, but there are many options in the listed space. So the investor is already spoiled for choices. Bigger NBFCs such as Bajaj Finance would continue to be the go-to option for many investors, especially given their better performance too. So all these factors take away the shine from HDB's IPO. What do you think about it? Would you invest in HDB Financial's IPO? Do let us know in the comment section. And that's all I had for you today. Hope you liked it. And if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.